Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video I'd like to look at multi-time frame analysis and how it helps you uncover a great sell setup on the YM that unfolded yesterday. But first we have to look at our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. They're only just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing, or put another way, all professional traders will know and understand, but more importantly accept, that losses can and will and do unfold. In fact, the first setup we look at in today's video, it will actually be a losing trade. Right, this is a 3-minute chart of the YM from yesterday, which was the 24th of July. So how do we approach MTPredictor? Is it a black box system where we just follow all the automatic setups you can see on the chart, perhaps in the direction of our MTP trend color, blue for up, red for down, and grey for in the process of making a reversal? Or is it something else? Well, it's something else because we know and understand that markets basically for 50% of the time, or maybe slightly more, are random. That's why so many amateur traders get in trouble, because they try to place analysis on a chart where the pattern's not clear. So how do we define when the pattern's clear if the markets half the time are random? Well, this is where we use multi-time frame analysis. So for this we go to the higher time frame, which is a time frame between 3 and 5 time frames higher. So if you're trading on a 3-minute chart, it would be the 15-minute chart. If you're trading on, say, a hourly forex, you'd go out to a 4-hourly chart. If you're, say, trading on daily stocks, you go out to a weekly chart. In fact, in yesterday's training webinar we did a great example on a daily chart of Google and how it fell in with the weekly analysis. But that's not what I'm going to look at today. Today I'm going to look at this 3-minute chart of the YM. So if we go back before yesterday even unfolded, we look at our 15-minute chart and we can see by eye that there was an important significant high here. Can you see that? The market was chopping around a bit. This is where the random phase is, but there's an important psychological high here, an important high. So we right mouse click, we place decision point on, and can you see how that gave us a potential resistance area? But it's on the chart in advance, so even before yesterday even unopened or started to trade, that resistance area is on the chart. So if we look what happened yesterday, you can see the market went up into that level, down, then went up and made a reversal at that level again. So now if we come down to our 3-minute chart, let's see how this unfolded. I'll just drag this along a bit so we can get to the chart. So after the second push up into the high here, you can see we had a gap up earlier on. It came into the resistance area, made a meaningful reversal, started to go down, came back up again, and then made a history triangle. Let's just jump back to that history triangle and see that it was actually a potentially valid sell setup there at the time. So we right mouse click, do our analysis. Remember, we use correct position sizing to the varying number of lots, contracts or shares to keep our initial risk small, in this case less than 2% of a sample $20,000 account. This was actually a perfectly valid trade, in particular because we're coming off this reversal here. But if we step forward, you can see that would have taken you into a short trade and then would have actually stopped you out. This is important to look at because remember what I said right at the start when we're looking at the risk disclaimer: losses can and will and do unfold, and it's important to show them in these videos. So because of the position sizing, we call this a 1 risk or 1R loss. So that would have been a losing trade. We then carry on going. The market kept on going up, whoops, gone 1 bar too far, and again it was back up into our resistance area, but then made a DP sell. This again was also on our black MTP trend, so showed you that the market was in the process of making a reversal. But do you see how it is at our higher time frame resistance as well? So if we now right mouse click, place the analysis on, this then gave another sell setup. Again, position sizing took care of the number of contracts and also had our profit target on the chart. In this case was a potential 8-hour profit, which looked like a very good trade indeed. So let's now turn training mode off and see what happened. And as you can see, that actually nailed the very bar of the high of the day. Look at that. The market then declined nicely, came right down into our profit target area, where a profit of approximately 8R was available. And this is the beauty of using position sizing, because remember we had a losing trade here. this was a -1R loss, but this trade was not just a profit, the profit was 8 times greater than the loss earlier. So this profit was 8R, or 8 times greater than the initial risk or the losing trade earlier. And as you can see, this was a great trade, effectively nailing the very bar of the high of the day and taking profit down. That wasn't quite the low of the day because it came in a bit earlier right at the start, but was certainly captured one of the biggest swings throughout the day. So that's a great example of how to use MTPredictor with multi-time frame analysis. In other words, we're looking to find when the market is moving out of its random phase, which it is in that phase about half the time, into a clearer picture, and for that we use our higher time frame charts to then place our higher time frame DP support and resistance zones on the chart. We then look to see whether the market is making meaningful reversals at these levels. In other words, if the picture is clear, that's what we're looking for. If the market goes beyond these and chops around, like we covered in yesterday's trading webinar, then we probably want to say that the market is not as clear as it could be, and as such avoid it. So we're only looking for times when the markets are making clear, clean reversals at our higher time frame DP support and resistance areas. We then use that to define the larger degree trend, and as we can see here, the reversal was perfectly in the higher time frame resistance area. It then came down, came up, gave us a sell setup, which actually was a stopped out. Losses can and will and do unfold, that's important. That loss was only a -1R loss. It then made another high, again in the area of that resistance area. Remember, we look at the resistance area on the actual time frame it was placed on to see whether it's a failure. So just because this dipped just above the resistance area here on the 3-minute chart, if we look at the 15-minute chart, which was the time zone that the DP was actually placed on, you can see here it didn't even close beyond it really. It went up a little bit, then went down beyond it a bit. So to define whether this is a failure, we look at the to see whether there's 2 consecutive closes on the same time frame as it was placed. In other words, in this case on the 15-minute chart. So this was definitely making a lovely reversal. And as you can see, that nailed the very bar of the high of the day, and as such had a very nice short trade where the profit was approximately 8 times the initial risk. So great example of how to use multi-time frame analysis using the MTPredictor software program, in this case on the YM yesterday, which was the 24th of July.